Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Being bullish. In today's episode, I just want to speak about being bullish. I received an email last week about, and essentially, the email was saying, why am I bullish all the time? And the emailer was essentially saying that he was saying that I was too positive, I was bullish too much, and the markets are going to collapse anytime soon. I'm not going to say the markets aren't going to collapse anytime soon. That is all possible. But the reason why I'm bullish at this point in time, it's simple, is because the market is trending in an upward. It's trending upward, and the momentum in the market at this point in time is to the upside, and the profits to be made in the market at this point in time is to the upside. I'm going to highlight a number of stocks that it's better to be long these stocks than to be short. So why am I bullish? Because we see a series. This is the chart of S&P 500. And we see a series of, if you track this market, you see higher highs, higher lows. So you see these moves to the upside are much bigger than the moves to the downside. So the profits, it really makes more sense to be on the long side of this market rather than be on the short side of the market. So the reason why I'm bullish is simple, that the prices are saying at this point in time the market is moving to the upside, and that is why I remain bullish. At some point in time, prices will turn around and we will get a correction. And then my analysis will change and I say, okay, we are more in a negative territory, or we're in a pullback, or we're entering a bull market. So my bias does not depend on the politics. It does not depend on what I feel about the markets. It's all about what prices are telling me. And prices right now in the stock market are saying up. So that's why it's better to be on the long side of the market. So that is the answer to the question why I am bullish at this point in time. Looking at the various markets, the S&P 500, Dow, and Nasdaq are up today and up fairly comfortably, making new highs. And I think the Dow is trying to reach to that 22.5 to 23,000 region. That would be a good headline. Dow 23,000, but we're seeing a pretty strong move up at this point in time with very little resistance above the market. At this point in time, the VIX is relatively low. Investors fear the fear factor, as you can see, that spiked in August is down again to the nine region, 9.586, and that is almost at a record low for the year. And just looking back at the monthly VIX, we see that the record low for the VIX is 8.60, and we're currently at 9.57 on the VIX. So the fear factor in the market at this point in time is very, very low. And anytime you get a VIX that is that low, you can, while I still remain bullish, you can be rest assured that we could be in for some turbulent markets in the months to come. Now, looking at the seasonal patterns, September, October, November, we normally get a slight downturn, and then the market will rally into November, December, latter part of November, December. So that is a seasonal trend. But at this point in time, we still remain to the upside, and the VIX still remains fairly low. And what I would advise at this point in time in stocks is to tighten your stop losses below the market, because we could get a sudden sell off, and it doesn't really make sense you give up most of your profits. Taking a look at the German DAX, and Yesterday, I highlighted the fact that the DAX was near its all-time high, and we see that the market is coming up on that 13,000 level in the DAX, and you see the market is rallying strongly. So we want to see if the market can actually eclipse the 13,000 level in the German DAX. Will be very bullish for this market. Okay, US dollar index. US dollar index is unchanged on the day after bouncing. We saw a strong bounce on Monday, and we had some follow through buying, but the market turned around and is unchanged on the day. Actually, just ticking down slightly to the downside on the US dollar index. Looking at the gold market, we see that gold is down on the day also, and actually it just flipped to positive on the day. Okay, so gold is slightly upwards for the day. Last time I checked, we're actually slightly to the downside, and we see gold coming up onto support in the 1270 to 1250 region. So we'll take an eye on, or keep an eye on that region in the gold market. So looking at a number of ETFs, and I will focus on IBB. I own this in my model portfolio, and we see that the market reached a new high for the year, and this market, we had a strong move to the 400 level. The market pulled back to 250, and as you can see, the market is on its way back to the upside again. I believe this ETF is a hold. Looking from 2009, this market rallied from $58 all the way to $400. So it was quite a phenomenal move in this ETF. And the market, we did see a strong sell-off in the market from 400 to 250, and that's why it's good to collect your profits or book profits, because this sell-off that took place over a year, roughly a year, almost cut the value of the ETF in half, and now the market is rallying again. So with these movements, it's good to time when to exit and enter the market. That doesn't mean you have to be day trading. It just means that have good entries and exits, and look for these longer term trends. Looking at Apple, Apple stock was down slightly over the last couple of weeks, but as you can see here, we see the market coming back after finding support in that 150 region, and Apple at this point in time is a hold. So if you are having a position in Apple, this is a hold situation, with the market looking to want to challenge the $165 region again. Looking at Amazon, we always look at the popular stocks. Amazon, we see the market backed off of that 1050 region, and as I said last week, is finding support down in this 950 940 level, and the market is bouncing nicely. If this market eventually closes below 900, I'll be looking to exit and book the profits that the market probably has made already. This is another stock that has had a tremendous move to the upside, and it's good to book some profits. So if we see a pullback below 930 to 900, taking some profits would actually be a good move. Taking a look at Netflix, another stock that had a huge pullback a number of years ago, and it has shot to new highs. We saw the market run up and test resistance at 190, and the market is backing away from that 190 region. So we have strong resistance at $190 in Netflix. And if we do close below 170 to 165, that may be a good point to take some profits in this market. Fairly steep triangle here. But Netflix is, because it has just been rejected from resistance, this is a market to look at and look to see if you get a swift pullback in this market. Okay, so that is it for this edition of Smart Investor Podcast. Remember that we are doing themed days, and what that means is that on Monday we may do ETFs, on Tuesday we may do currencies, Wednesday we may do uh, sector analysis of the stock market, Thursday we may do commodities, just to give you a broader outlook and a broader grasp of what the markets are doing, what are the profitable moves being made in the market. So if we are working on that, and we will probably unveil that next week. If you have any other suggestions for the channel, please send an email to info@smartinvestorcentral.com. I really do appreciate your support. Subscribe to the channel. You can hit the subscribe button. It helps out the channel, grows the channel, and this channel is for you, the investors, to bring in you actionable market analysis on a daily basis. So it's your channel. If you have any suggestions, please let me know. Thank you for listening, and I hope you have a wonderful day.